In today's video, we're going to be discussing 5 new healthcare names to add to the portfolio. We've been adding to value names as the market approaches all-time highs. We're trying to get out of growth and go to value so that we can shield our portfolio from the volatility that's going to ensue as the market corrects. And we also want to add more performance where we can safely and more yield where we can safely. So I'm exploring these 5 healthcare names. They have rather high dividend yields, so please stick with me and let me know what you think of these names that I propose today. So we earn over $100,000 per year in dividends at this channel, and my performance and value shows that I'm up over, let's see here, 47% for the year. The Dow's up 7, the SP is up 19, and the Nasdaq's up 36. So these are eye-popping numbers. Everything is up huge except the Dow Jones. And that's why I'm trying to find more plays that are linked to the Dow Jones. There are a lot of healthcare names within the Dow Jones. So we've been buying Schwab, been buying basic materials, a lot of things like that. But today we're going more defensive with healthcare. We bought Altria, which was a defensive staples play, and now we're going with healthcare since they look cheap. So I'm going to give you these 5 names. Let me know what you think. Here we go. If you need help understanding how I get this performance out of my account, email me for my e-guides at akintalk48@gmail.com. I get this performance from using a little bit of margin. For every $1 you put in your account, you get $4 of purchasing power, okay? So I just use a fraction of that purchasing power, this almost $1 million in purchasing power. I just use a fraction of this down here, this $215,000 in debt. Yes, interest rates rose the other day. The Fed raised rates, but it was by a minuscule amount, so it barely affected my margin interest. This is a relatively low interest loan compared to credit cards and other kinds of loans that you're familiar with. So, I mean, 5% interest for me, 5 or 6 roughly, that's nothing. If they raise by 0.25 basis points, who cares? So, and then when they start cutting rates, that'll cut our margin rates by the equivalent amount. So I get the performance from using margin. Anyone can use margin. Anyone has this power granted to them in a brokerage account. For every $1 you put in, you get $4 again. And then I also use Cornerstone as my big, well, you could say cornerstone of the portfolio, no pun intended. I have about 500 grand in Cornerstone. This is where I get most of my performance. It's tied to the indexes. Cornerstone's also a 5-star fund, so if you think it's falling on a chart and going down over time, you will be mistaken when you see it on the Morningstar chart. It actually beat the S&P over the last 10 years. So yeah, what's so special about Cornerstone? 21% dividend. I'll say this briefly, guys, for all the newcomers here at the channel. If you look at Cornerstone's lots here, $8 is the market price, but you drip the 21% dividend down here at the NAV. Okay, so for Cornerstone, if we zoom in on Cornerstone's tax lots here, you'll see $8 is the market price, but down here, the NAV, excuse me, 652, 642, excuse me, 627. Look at these gains. 33% gain. 642, 30% gain. 633, 32% gain. So $1,000 every month, the 21% dividend is dripped back at NAV for those instant gains, plus you get days gains. So 5,000 we're up on Cornerstone in a day on Friday, roughly a little over 5,000. So that represented almost half of our day's gains here, which were actually over 10,000 at one point in the day, but E-Trade updates funny over the weekends. So so this was about half of our gains, Cornerstone, all right? But you have to learn how to play Cornerstone, okay? Every year it has a rights offering. That's why it looks so bad on the chart. You have to time it around its rights offering, just like other closed-end funds have rights offerings. This is no different. You have to time Cornerstone around its rights offerings, and you have to ask for the special drip. If you need help playing Cornerstone, email me for my e-guides on how to play Cornerstone at akintalk48@gmail.com. I have e-guides on how to live financially free out of your brokerage account using the power of margin, and I have e-guides on Cornerstone, okay? When you buy my e-guides, you also get access to Discord, where I alert you of the Cornerstone rights offering announcement. That's what this channel is for, this one. And so we have other channels like, Cornerstone RO announcement, daily trade recaps in my portfolio. We have a Canadian channel. We have yield max strategy. We have Bitcoin, protecting your portfolio, different day trading strategies. The guy in here, Carbon Zero, really smart guy. I'd be paying attention to his trades if you have the time. So, it goes on and on. We're only going to be adding more channels into Discord as demand permits and as people keep trying to branch the conversations off into different areas. So that'll be growing, and I love seeing where the conversations lead to on Discord. I'm really learning a lot from you guys there. as well. So I'll be alerting you of the rights offering on Cornerstone on Discord, so you don't have to worry about how to play Cornerstone here, the fund. I would simply buy this fund now, by the way. A lot of people ask, can I get into Cornerstone now? I think so, because you're getting dividends. So it doesn't matter what the stock does going up or down. You're just getting the dividend. If the rights offering comes, I alert you of it on the Discord chat room. So usually they give you a week or two to prepare when they give you the rights offering announcement. So you don't have to worry about it just tanking right away. They give you some time to get your affairs in order. But I will give you that alert in case you can't stay on top of it yourself. So moving on down the line, okay, we had a great day in the portfolio. OARC was up huge, okay, but we're not going to do a review today. I'm just going to share with you the names that I'm buying on Monday. The first name is, okay, without further ado, Bristol Myers. All right, Bristol Myers. Bristol Myers is a top quality company that is really cheap on its chart. Okay, it's hard for me to click Bristol Myers right here. Okay, return. Okay, Bristol Myers has a nice dividend. Okay, 3.75%, but look at it on a chart. Okay, I got recommended healthcare by my subscribers. I really appreciate them for bringing this sector to my attention. Because it is another value sector. It's a defensive sector. And look, there are some names on sale and they look perfect on the chart. Bristol Myers right here, right on the 100-day moving average, that blue line. Look, every time it taps the blue, it rallies. Blue line, rally, blue line, blue line. Yes, it touched the 200 here briefly. That was during the 2019 correction, it looks like. So I'm going to be buying a little bit of Bristol Myers. I'm buying 500 here. Why is it down so much? Yes, because it lost exclusivity to its Revlimid drug, but as you guys know at my channel, I don't really pay attention to fundamentals. As long as it's in the index and it's in the S&P, I don't care what happens. Okay, I just want cheap prices and I want dividends, because the dividends cash flow the investments over time. So Bristol Myers, I just showed you that chart. It looks pretty compelling. Yes, on a 1-year chart, it's looking gruesome. But if you look at it on a max time frame, maybe a lot of this bad news with Revlimid is priced in now. It's still a top quality company. So if we go any lower, if we go to 55, okay, we'll be near the 2022 bear market lows. So I'm looking forward to buying 500 here and another 500 on any dip of Bristol Myers, okay? Moving on. So let's go to the next one I'm going to be buying, which is Walgreens, okay? Walgreens, I know it's another controversial stock, but it was in the S&P. I don't know if it still is. I haven't checked, but it definitely was. And so I'm trying to just get more index exposure through the S&P. Walgreens is also really cheap. All right, yes, it has a lot of debt. Yes, it had problems after Corona. But I still go to Walgreens myself. It's right next to CVS, and I prefer Walgreens. I see more foot traffic in Walgreens, to tell you the truth, even though CVS stores are a little nicer. If you look at a max time frame chart of Walgreens, the downtrend is definitely strong, and this does not look good. This does not look like a thing you want to buy, but usually you want to buy when things look bad. So look, I mean, if we go any lower to $20 a share, that will be the '08 lows. So they keep growing their dividend. Walgreens, it has over 6% dividend. It's a dividend aristocrat name. They keep growing dividends, although that growth is slowing on their dividend growth front. They're still growing dividends. They have plans to turn around the company. Some people say it's going to happen within 2 years or so. So I'm looking at this as an ultimate deep value play with a dividend, with a way to play healthcare. All right, and it's also indexed. These names I mentioned to you were in the S&P or are still in the S&P. Okay, moving on. THW. I'm going to show you a fund here. THW. All right, this fund is my go-to healthcare fund. I usually don't buy stocks, and if I do, I only buy 1,000 to 500, as you guys know. Walgreens, I'm buying 500 here, the other 500 down at 20 a share. I'm buying in positions Bristol Myers and Walgreens. They also have low maintenance. Bristol Myers and Walgreens, all these healthcare names have low maintenance, which is the big secret of my channel. All right, now I'll give you more on maintenance in a second when we get to the next idea I have. So THW. Okay, 10% dividend monthly, all right? And also it's cheap on its chart. I mean, look, it was at 15, now it's at 13. This is similar to Cornerstone in that it has rights offerings every year, so you have to time it around the rights offering. But if the premium doesn't get too high, maybe you won't have a rights offering, similar to Cornerstone's case. So, yeah, I mean, it was at 18, and now it's at 14. So, to me, that looks like there's some upside. It has all the top quality healthcare names within it. So, to me, THW is a no-brainer. I always get in and out of this fund, and at this price, at a 10% dividend, Why not? So I'm going to buy 2,000 or so, 1,000 or 2,000 of THW on Monday. The stocks, I'm starting with 500. THW, I'm starting with 1,000 or two, and I'll build this up to about $5,000. Okay, THW, all right, always a go-to for me. Moving on. Okay, THW also has low maintenance. Moving on to ABV, ABBV. All right, this is a less controversial pharma play, and look, it's breaking out huge. And the reason why I'm still attracted to it is because it has room to go before it hits resistance of about 160 to 170. Okay, looks like 165. So you can get about 10% upside in this name, and you're collecting a big dividend. But it had a nice breakout, right? So what do? I'm just buying 500 here at 150, and I'm buying anywhere on the dips here. If we can get a pullback to 140, that would be a blessing. Okay, AbbVie is a great company. Overbought. Okay, it's definitely had a big run. Look for that to cool off, but when it does, I'll be there backing up the truck, dollar cost averaging in my position. AbbVie, once again, here for almost 4% dividends. So that's why I'm liking AbbVie, and again, top quality name in the S&P, giving me index exposure to the S&P. Okay, and shielding my portfolio from unwanted volatility. The last name I have for you is more of a growth play, and it's definitely a speculative play, but it's in the Russell. All right, you have to tie your performance to the indexes. So when I buy all of my healthcare names, even if I'm buying healthcare, which is defensive, I still want growth where I can, but it's a deep value play. If you look at IIPR, okay, 9% dividend, which is not bad. And look on the 5-year chart, it's cheap. It's at the lows again. And if you believe in the medicinal cannabis space, then IIPR could be a growth candidate and a defensive play. It could be both. And I want to show you something in particular about IIPR. No, I don't condone, any of the drugs that any of these pharmaceutical companies sell. I mean, I really don't even want to get into the products that they sell, but for IIPR, they're just a landlord for the growers who grow cannabis. So that's why I like IIPR. It's like a risk-averse way to play the cannabis space, and it's a high growth area, and I don't want to have FOMO. Sometimes those stocks take off, and this is a way to play that, but you get the 9% dividend. But the best part about IIPR is the maintenance, okay? It's kind of high. It's not like Cornerstone at 30%, but 45% maintenance, that's pretty good for such a growth, for a high-risk name like cannabis. Okay, so if I were to go and buy 1,000 of IIPR, which I already have 500 in, by the way, so I'm going to just rebalance with another 500 down, cut my cost position in half. So 212,000 is the available withdrawal. That's the only number I care about. I don't care about 489. That's just egotistical and makes you feel good and makes you feel bad when the market's down. You can't be swayed by your emotions. Okay, you have to just watch the available withdrawal. When that gets to zero, you're in a margin call. I can withstand over a 30% correction. Even in a month, I can withstand that, and I have short options, put options to offset that loss. Okay, so I would make more in the puts on the downside than I'd lose in my account on a 30% drop in 1 month. If we have a 30% drop over the course of a year, then I still don't mind because my yield on my account is about 20 to 30%, which means that, let's say the market falls 20% and Cornerstone has a 20% dividend, well, you break even at the end of the year. So if it's a drawn out correction, a 30% correction over the year, I am not worried one bit. If it's a 1 month black swan event, yes, that is worrisome for anyone's portfolio, but I have put options down here which will help me, which will shield me from that problem. And I added to the puts on Friday, on Friday, in the strength of the market. Okay, the market was up big, so I added to my puts on Friday. So if I buy 1,000 of IIPR, it only takes up about 450 of equity, 45% of my equity. This is how you have to keep this. You have to keep this number high so you can swipe out of your E-Trade account, live financially free. I use my E-Trade card to buy whatever I want: clothes, cars, food, travel. All right, pay my bills. All my bills are automated out of E-Trade. But if you have too high maintenance of names, too high maintenance in every one of these funds, even if you don't have margin, you'll have little available withdrawal, and that makes it hard for you to live financially free. So, and if you need help understanding maintenance, again, that's in my margin e-guides. Email me at akintalk48@gmail.com. Okay? So if you have any other suggestions on how to play healthcare, please leave those in the comment section below, guys. Also, if you have questions on anything else that I do, whether it be with Cornerstone or, again, margin, just email me at akintalk48@gmail.com, and I'll talk to you soon. Thanks.